It's jobs week and treasuries want to raise too as yields reach an 8-year high. And joining me to say, well, hi, is Matt Cheslock. Hey, Matt.
Yeah, this is an interesting day today.
It sure is. So, Matt, can we have a good economy, that's rolling okay, and a solid stock market? What's going on here?
Yeah, well, I mean, the U.S. economy has been the driver all along, and now we're starting to get the market is starting to finally appreciate the fact that the Fed is going to raise rates and do it aggressively. Despite what the GDP numbers may be, we're talking 2 to 2.5 going out 2019, 2020. That's down from our 4.2. They're still going to raise rates. So the market seems to be accepting it as we're hitting all-time highs every day. And I think today is more of just a reaction to the massive move that we saw in the 10-year yield. And this has been this move was quick, was fairly violent. And I think it caught people off guard because of its violence.
The move as in the sell-off today?
The sell-off today, yeah. We're finally starting to see it after 3 straight up days, strong days. But it was a very narrow breadth of stocks that were participating in that. So today we're starting to see a sell-off in those names, a sell-off with anything that was interest rate sensitive. And the only thing that's really carrying us today is really the financials, which are the biggest beneficiary of the 10-year yield move.
That'll be a nice run-up for their earnings next week, right?
Yeah, it's they're finally starting to get a little bit of love in this, interest rate hiking environment. So if they can have great earnings, which coincides with the rate increases, they're really going to be under the microscope here as far as where people can invest their money and get some return. It could be in all the financials.
We're also seeing a sell-off in some high yields bonds. HYG, of course, I like to look at. Looks like there's some major distribution today, as you discussed during the run-up. So would you say there's any sign of caution here, or is this just, can we shove this aside?
We saw the last 2 days, we saw some incidents where we had ricin that was delivered to the Pentagon. We saw the market kind of roll over real quickly. We saw yesterday was a news event that caused the market to roll over quickly. Today we had this chip fear about China using chips in Apple products and Amazon and things like that, and we saw the market kind of roll over there. So there's been other things that have forced us to see the sell side, but when you put it all together and you see a rising rate environment like this along with some of these other things, and you're starting to see maybe some selling in some of these high yield things, where are they going to put their money to get that kind of return? It might not be in the stock market. So I think people are taking a fresh look now and saying, you know what, this Friday number is going to be bigger than we think. We've got to now start paying attention to these.
So tomorrow can be a big game changer.
I'm not a big month-to-month jobs number guy, but if the number is going to be that substantially greater, it's going to meet everything the Fed has been telling us all along, and then that's going to really help them with their cause about raising rates, and it's going to be just another bullet point for them to say, you know what, we're telling you we're raising rates, and this is the reason why.
Oh wow! So maybe instead of presidential alerts, we'll get Fed alerts, earnings alerts. Who knows now?
Well, as long as we're not having anything on the Supreme Court soap opera, if we can start focusing on what we really need to focus on, jobs and things like that, we'll see how the market reacts to it. But, reacting from an all-time high is not a bad thing if the economy is showing these signs of strength. And maybe you get a little bit of change in your portfolio. But, again, from these heights up here, it's not a bad thing to see a small retracement. You can get your money back into work.
Yeah, that's right. We're sick of getting nosebleeds at these highs. We want to come down a little bit.
I don't think a lot of people want to come down, but unless you want to get back into the market, and people have been talking about where do you put your money? Is it going to be emerging markets? And they're not showing signs of technically really turning just yet. It's still all about the U.S.
Emerging markets. Can you say that again? What did you say about emerging markets?
Well, emerging markets, we've seen, lower highs and lower lows over the last little bit. But at some point, people are going to say, where is the risk? Where's the reward? And it might be emerging markets. As they get out of the U.S., they might try to find a home in something that's been a little bit beaten down. So that might be something as you watch, you're starting to see some, some of these investment houses start talking about emerging markets a little bit more. So that would be something that I would be very closely watching as we get into November and December of this year.
Yeah, well, next week we're in the U.S., we're going to be watching out for earnings. But like you said, in EM, we do have the Brazilian elections. And did you hear what happened, how the one candidate, the lead candidate got shot, and that helped his ratings?
Well, I guess that always helps, right? To get the sympathy vote out there. But, you start talking about Central America, there's a lot of issues with their currencies and where things are. So if you get a little more clarity, people are more inclined to say, you know what, I'm going to put some money to work because I like what's going on down there.
Well, thanks for bringing that up and mentioning that for our viewers, Matt. Always nice to have you on Thursday. I say it every time, and we'll see you next week.
All right. You have a great day.